And we're just welcoming everyone into the room now. You will have been in the waiting room. Thanks for joining us, everyone, as you start to load into the webinar this morning. Thank you for joining us. I'll just wait till we've got a quorum. Got a bunch of people. This is Dan and Gayle. This is a very interesting topic, job costing. We've had a record number of people register for this webinar, which is great. It confirms for us the importance of this topic in the scheme of things, and it's really good that people are keen to learn more about it. So just as people are joining, if you wouldn't mind, we're going to just test that the chat function is working, because that's what we're going to use today for questions. We won't be using Q&A. We're going to use chat. So everyone who's joined us already, if you wouldn't mind, can you tell us, out of interest, where are you joining us from this morning? And if you feel like it, but it's okay, you don't have to, you can either tell us or you can tell us what you're interested in learning today. What has brought you to the webinar today? We've got people, as usual, from all around the country here. Western Australia, Townsville, the Philippines, working for a builder, another person from the Philippines, Sydney, Leah's down in the Shire, welcome from the Shire. Echuca, beautiful part of the world. Once again, there is people from all over the country and New Zealand. Matt's here from New Zealand, which is great. We had a guy message from the UK the other day saying he wasn't going to be able to make it because clearly the time zone isn't great. So we'll be sending out the video to him. We'll also send the video to everyone else that has registered too. So yeah, okay. I think we might kick on. Everyone's busy, so we're going to get cracking here. Dan, if you wouldn't mind, let's move on with these slides. So just a bit of housekeeping at the top. My name's Phil. I'm one of the partners here at Xact Accounting. I'm going to sort of host today's webinar. The real content is going to come from Dan and Gayle. I'm just going to sort of MC as we go. So to start with, we're going to start with just a few basic principles around commercial accounting, just to start, setting the table of the content that we want to get through today. And then we're going to move into job costing. So the why, why should we care about job costing and why it's so important? What does it actually mean? Like, what is the actual process that when we talk about job costing, what do we actually mean when we say that? How do I implement job costing, which is, hopefully, most people have got the why and to a degree what, but it is a tricky thing to implement in a business. So we're going to go through that. And then finally, we're going to go through, well, now I have this newfound financial visibility of how I'm traveling with margins, etc. What do I do with that information? So what are the opportunities that arise? In terms of the interactivity today, we're going to have some polls, just a few polls. One of those is at the end. This sort of topic that we cover in these webinars usually generates quite a bit of interest that people then want to follow up on. So there'll be a poll at the end that if you do want to book a session with Dan or Gayle or one of the team in CFO, you can book a complimentary consultation. So we'll do that via a poll. You don't have to fill out a form or anything. We'll do that at the end. We'll also be sending out any resources we've discussed today and a recording as well. We like to try and get that out the same day. So failing any kind of technical hitches, we'll be sending that via email to everyone that registered. So that will be coming your way. Questions. So if you do have questions, please drop them into the chat. As I said a little bit earlier, these guys who are delivering this content really know their stuff. So please don't waste the opportunity to not to get an answer this morning. Make the most of having these guys on the call, experts who can answer your questions. We do try and cover a broad sweep of content in terms of the complexity. So if you feel like there's something, you have a silly question, please ask it. We don't want you to go away without having asked it. If you think like you might have a more advanced or technical question, ask that as well. What we will say, though, with some of the more technical in the weeds questions, that they are really good for those follow-up one-to-one consultations afterwards as well, just so that we don't bog it down in the specificity of the particular question. It might not be relevant to everyone, and we usually need to know the circumstances too. So, okay, so that's the housekeeping. Our presenters, so we have Dan Wilkinson and Gayle Williams. They're both client directors in our CFO advisory team. They've both had extensive careers, not in public practice accounting. They have had extensive careers in commerce. So they've worked in businesses and sort of more recently over the last 4 years or so moved over into the consulting and advisory space. So that means they bring with them a rich career of experience at the coalface, actually working in businesses rather than our colleagues in tax who really have a more public practice related background. So that means that their advice is not just theoretical, it's practical because of the lessons they've learned in their careers. Next slide, thanks, Dan. Our services, just a quick overview of Xact if you don't know about us. We have 3 primary services: bookkeeping, compliance. So most people, well, everyone has to have a tax accountant, right? So everyone would be familiar with the services that our compliance team supply. We certainly specialise, though, in tax optimisation for building and construction. Bookkeeping, so it's a specialist service around bookkeeping, helping you more than anything these days integrate all of your platforms. So Xero to Build Xact to Deputy, those sorts of platforms, make sure that your bookkeeping workflow is as efficient as it can be and produce the data you need. And then finally, CFO Advisory. So this is where, as I said, Gayle and Dan live. This is their world. And CFO Advisory is all about providing commercial support to businesses to help them, improve financial visibility, but ultimately to drive better profit outcomes. I'll break that apart just one layer deeper in terms of CFO Advisory, because that's sort of the service that we're talking about today. So there are 3 pillars to CFO Advisory. There's the core commercial accounting piece. So this is all about budgeting and forecasting and improving margins, making sure that you can see exactly how your margins are traveling across all of the jobs that you've got in flight, all of that sort of good stuff from a commercial accounting perspective. In addition to that, we provide other commercial support. So we provide adjacent services around things like HR, IR, sales and marketing. Because Dan and Gayle and the team have had experience in business and have quite often had functions like IT and others report into them, they've got that coalface experience of, I've got someone in this position, I don't know what to do with them. Should I fire them? Should I develop them? Those sorts of conversations that they have had experience with, and they can add to the client engagement as well. The third pillar is this running mate concept. So it is pretty lonely running a business. Quite often you don't have someone to bounce ideas off, even just to get additional advice and support, not just, as I said, on the financial side, but other things that are going on in the business. It's good to have someone as well to keep you accountable to the goals that you've set. And so we play this role in CFO as well of being your running mate to help you achieve the goals that you want to achieve, and to have someone else to bounce all that around with. So that's CFO Advisory. Next slide, Dan, is over to you. So Dan is going to take it away now with the rest of the content. And we're starting with this really important principle in commercial accounting, which is what we call the profit feedback loop. Over to you, Dan.
Yeah, thanks very much, Phil. And everyone online, thanks definitely for making the time today to jump on board. I can't stress enough, if you have any questions, please jump online and shoot them through. Gayle will jump in and give me a poke while I'm in my swing and vice versa as well. And we'll sort of tic-tac off each other in the background as well as this stuff develops. So bear with me initially. I just want to go through, I guess, a few of the fundamental principles that sort of build up what a robust and profitable and successful business looks like. So we're going to give this a bit of analysis first, which is the profit feedback loop. So where the battle usually sort of starts, or I guess where you sort of lay the groundwork to victory is around the estimate. So is your estimate process sound? Is it accurate? Is it complete? Do you have the right suppliers and trades on board? Do you have the right pricing on board? And do you know how to estimate? Is that your strength? So when I'm talking about estimating, I'm talking about obviously, building the house from the ground up. So that could be a new build, renovation, whatever it happens to be. But have you got the right people driving it? And have you got the right systems and processes to ensure that whatever you're putting forward as far as costing or bill of quantities or whatever it happens to be, is that right and accurate? Now, when you come down to this next quadrant down the bottom here, which is the bit that we're going to pull apart and celebrate today, is the job costing. So I see time and time again, and I'm not trying to be rude here or anything like that at all. The builders, when they're sort of going from owning one or two jobs to owning three, four, five jobs, they are generally really good at the estimating stage. But once the client signs a contract and cash starts flying everywhere, the job costing side usually gets left by the wayside. Hey, this project here should be a $1.5 million build, so ignore the revenue for the moment. And we get halfway through the build, and one of my questions, particularly with new work clients, I'm like, well, how are you tracking against it? Oh, Dan, I've spent about 600K on it. I'm like, well, I don't really care too much about what you've spent. What I care about is what is that if you are coming under budget and whether you're overspending or underspending. Because if you come in on budget, I mean, from my world and my background, I mean, I couldn't really care because you've hit budget, you've hit the plan, away we go. What I care about with this piece is like how well and how effectively are you defending your margin on that build? That's what job costing is. So an example of job costing really quickly is, say you have the tiling and bathroom too. It's estimated to be $10,000 for supply and materials. Did that come in at $10,000? Or did you get the invoice from the trade or subcontractor, whoever it is, and came in at $12,000? Well, that means you're torn up $2,000 of your margin. That's the incremental piece I want to know. And that is the building block to ensuring that you do have a really successful business that is profitable. Because in the building construction industry, unfortunately, there's not a tremendous amount of margin to be made. I mean, you can make decent money in the building construction space, but you go, well, Dan, how do I defend that and how do I achieve it? Well, you micro measure it. And that's what job costing is exactly. So once you have strong job costing processes in place, the next part of this profit feedback loop is reporting. So if you have good data, that good data turns into good information, that turns into good reporting. And you should be looking at that daily, weekly, monthly, depending on what your cadence is. But at a minimum, you should be producing monthly financial reports for your business. So that isn't just a P&L spat out of Xero or Mile, whatever it happens to be. But I want to see job by job profitability, profit and loss, balance sheet. What's that doing? What's your cash flow doing? And when you bring all these bits of information together, it isn't the accountant or bookkeeper producing it for you. It really is your business's scoreboard to work out, well, are you winning or losing? And then if you're losing, well, what do we do? What's the call to action out of that? Which then ebbs into the analysis piece. So, for example, with that tiling and bathroom two before, well, if we've torn up $2,000, so the estimate was 10 grand for the tile to come into bathroom two and lay the tiles and all the rest of waterproofing, and the invoice comes in at 12. Well, how do we cook 2 grand of our margin, and how do we ensure that that doesn't happen again? Was it a RFQ process? Trade having a bit of a go and trying to slip through an invoice, in which case your process didn't pick it up properly, that there was a bit of an over. Are you running purchase orders in your business? Whatever it happens to be, because we need to crunch that immediately and work out how we mitigate that in the future. So that needs to happen monthly at a minimum. You can't get to the end of the project and go, well, the build's going to cost us 1.5. And if you can't micro measure the stages and the items, we have to measure it as we go through so we can get that feedback and go, well, the tiling and bathroom suite blew out because we had a dodgy trade, as an example. Well, I'm actually doing 3 other tenders that are using this guy or girl. Well, let's not do that. Let's go find someone else. That's what the proper feedback loop is, because the estimating the job costing side is pretty straightforward. Most of the people on the call will know how to build an estimate or know someone that does. The job costing side is where it starts getting wobbly, but there's such powerful information here to really rock your business if you get these quadrants right. So if you do follow our webinars, we punch this all the time, especially this screen here, and I can't stress how important this one is. So I just want to quickly just talk about how a dollar travels through building construction businesses. So this will vary a little bit depending whether you're in the renovation space or punching out bathrooms or your large commercial, whatever it is. But I just want to talk about a pretty standard residential builder at this stage. If you have any questions, shoot them through. I'm happy to tell you where I think your margin should be. But this is how a dollar should be trading through your business. So in this instance here, this builder has had $1 million of revenue come in, and it doesn't matter whether it's $100,000 or $10 million for a residential builder. What we want to see is that for your cost of goods sold, so they're your earners on site. So it's really important to sort of split the definition between COGS and overheads. And it's really important to split those out. But for every dollar you generate, so when your accountant, whether it's us or your tax guy or whoever it is saying, hey, your COGS are 80%, don't get scared of those percentages. What that means is that for every dollar that comes in, 80 cents is getting chewed out through COGS, which is perfectly fine. So if you're a pretty standard residential builder, and there's a lot of complexity in building construction, you should be spending about 80 cents on every dollar, or ideally 75 cents, a little bit less. So 75 cents or 80 cents on every dollar that comes through your business on cost of goods sold. So whether you have $1 million or $10 million, 80% of that should be chewed up in COGS. So what does that leave you with? So that's your gross profit. So your COGS are trades, materials, people on site, chippies, all that sort of stuff. That's what's picked up in COGS. So they are your earners. So they're the people that are creating the house, or I guess creating that direct value. So if in this instance here, if you have $1 million coming in and 80 cents is getting chewed per dollar, or $800,000, that leaves you $200,000 in what we call gross profit. So not net, not tax, none of that sort of stuff. We come down to overheads now. So out of that 200K, you're going to reinvest some of that money into what we call overheads. So they're your burners. So they are people like me, rent, software, accounting, or I guess other accounting fees as well, electricity, all that sort of stuff. And you should ideally be spending about 10 cents for every dollar you generate. So just to be clear on the dollar that's tracking through most of your businesses, and this is generalizing, mind you, but it is a pretty close to a one size fits all. A dollar comes in or $1 million comes in, you're spending 80 cents on COGS, you're keeping 20 cents for gross profit. Gold standard is spending about 8 cents on overheads, or 8%. So in this instance here, it'd be $80,000. So that'd be admin support, estimators, if you do have them in the business. Again, you can flex this number up for your size of business. And then what happens at the end is that you're left with this net profit before tax. So there's no company tax or anything like this, but a dollar pops in, 80 cents on COGS, 10 cents on overheads, and you should be left with 10 cents net profit. So what this means for you is that for those guys and girls that are working in the business, you should still be drawing a wage, because whether or not you're in the business or not, or say you weren't in the business, you'd have to replace your role anyway. So whether you're on the tools or head of sales, or depending on what age and stage you are, you as the wage earner and shareholder get a double hit. So your wages, depending on what your role is, should either be up in here, or a bit of a blend of both, but these ratios don't change. Now, if you're a large commercial builder, I mean, obviously the margin is going to crunch down to sort of 10, 12, 13%. If you do project homes, like 14 to 16% margins where it's at, your overheads need to be roughly half of that. So this is sort of step one, square one, as to knowing how to run a business. So I'm not talking about running a job now, I'm talking about running a business, and it's critical that you guys know these metrics. Especially the industry that you work in, the space that you work on, it's really important that you know these. So if you haven't checked out a couple of our other webinars, if you want to know more about this, we do have a Budgeting for Builders webinar, which breaks this down tremendously further. So definitely please check that out. It's just on our YouTube channel. Where I want to get to today is I bump into this $200,000 by accident. So usually when I sort of speak to new clients as well, I'm like, oh, hey, how much money have you made? Or, tell us your profit, or, tell us your journey. And I have some builders or business owners that say, oh yeah, I made 10 grand last month. So I'm talking about net profit now. And I say, okay, well, how much money you made? I'm like, oh, 10 grand. And I'll shrug my shoulders like, okay, what does that mean? I'm like, oh, it's a 2% return. Or, so for every dollar they generate 2%. I'm like, well, that's rubbish, to be frank. If you were operating commercially and you're sound and you're fit for purpose and, all the rest of it, you should be running at 10 to 12 cents at the bottom line. Whereas if I have a builder that comes to me and says, hey, Dan, I made 10 grand. For some of you, that might be a lot, might be a little, but hey, I've managed to run at 15%. I'm like, that's rock star territory. How do we duplicate and replicate that? And then how do we scale that? So part of that journey is that you're not going to win the battle in scaling and making money in your business by micro measuring overhead, because you only spend 10 cents there. And it's really easy to manage and monitor. Phone plans and rent and, et cetera, et cetera. You can't move the needle with that. But with that $200,000 of gross profit. So $1 million comes in, $800,000 gets chewed, 200K comes out. I want to know by job which jobs are contributed to that. And then in this example to the right here, we've just done a little bit of a light visual, but I want to know job by job who's contributed to that 200K. So job one here, so this might be for the month, the year, whatever your measurement period is. So job one is $400,000 in revenue. Here's your COGS, here's your GP. This job's running at 18%, 20%, 22%, and different jobs are run at different sizes. Like, you're not going to get away with a 22% margin on a $10 million job. And if you do, you're probably the best salesperson ever. But it's really, really, really important to know, well, what jobs are contributing what profit? Because if these two jobs here, for example, job one and job two are hitting budget, and you aren't giving away any margin, the costs are coming in or better than I guess your original cost profiles, I couldn't care. But if this job here over to the right-hand side, say there's a renovation project and should be running at 27%, and we're doing an end of month close and it says, hey, we've only contributed 78, where we should have contributed 27% GP because that's what we quote intended for, well, guess where I'm going to spend my time? So coming back a previous slide to that feedback loop, the estimate, the job cost, micro measuring it monthly at a minimum. What's the reporting? Well, good job costing will give us visibility as to what this looks like. And then this is the analysis, because this job here actually runs at 27%. I can see here rather cleanly that the sum of these three jobs are giving us $200,000 in GP. But you come across to the right-hand side here, well, we actually haven't hit our targets, so guess where I'm going to spend my time? So we don't want to bump into these profit figures by accident. We want to really and intimately know our numbers. Because at the end of the day, I mean, most of you guys on here will be business owners or at least major stakeholders. I mean, profit doesn't have to be a dirty word, but I want to know where every dollar is tracking through my business. And I don't mean to spend hours and hours and hours on admin and overtime and all the rest of it, but you can definitely systemize your business where you can get this data in really quickly and cleanly and leanly. And Gayle will touch on that in a little bit. So hopefully that makes a bit of sense. So I think, Phil, you're back in, mate.
Yeah, that's great. So we're just going to have a poll now. We've just gone through, how cash flows through a business. We've talked about margins and a little bit of benchmarking as well. Dan sort of mentioned some benchmarks there in terms of where we think, people should be, how they should be pricing work, what sort of margins they should be chasing, etc. So we just thought it might be interesting to run a little poll here. Now, please answer this honestly. This is anonymous. We're not going to be sharing any of this data. It's more about just to get, for everyone in the room as well, we'll share these results anonymously so you can see it in a second. But what is the GP for your most recently signed job? So we just got a job over the line. What was the GP that you've calculated into that estimate, and now that you've won the contract? For the most recently completed job, what was your final GP? Was your final GP position better or worse than you had quoted? And there's some interesting answers there. If we don't have a few people say that their job hemorrhaged, then we know that people aren't telling the truth, because that just does happen, unfortunately, sometimes. And then the final one is actually probably most important for what we're talking about today. So this ability to know what your GP is for the biggest job you have in play right now. So you might be, 2-3 months in. What's the GP? How's it tracking on that project right now? We expect to have a number of people on this question say we're not sure, and that is okay. That's quite common for people not to know. Unfortunately, it's not until you get to the end of a job sometimes that what profit you've made, what GP you've made there. So they're the three questions. I'll leave that up just for a little bit longer so that people can answer. We've got quite a few responses now already. We're up to 44% of people have replied now. So take a little bit of time and fill that out. And please be as honest as you can. There's no point bragging in this room. It's about learning.
Yeah.
Bit of self-awareness, Dan.
Yeah. Be vulnerable. I mean, it's always sort of good to know where your colleagues and peers are as well. I mean, I used to sort of find a lot of builders don't talk around numbers and margin and profit. But one of the benefits that we have without tooting our own horns, we get to speak to a bucket load of builders and we know where the market is. Yeah, so definitely be honest. Make sure it's gross profit, guys, not markup. If you're putting down markup, you don't know the difference, I highly recommend reaching out. And I can tell you what the difference is, because a lot of builders can leave a bucket load of money on the table when you don't quite know the difference. But I'll assume some knowledge here. We know what the gross profit is versus markup.
Right.
Right.
So they're the results. So we've got, interestingly, as the market would sort of tell us, we've got the majority of people quoting at 20 to 25%. So a third of people, and obviously that just depends on the sort of work that you're doing. It is spread though, but it's a real bell curve, really, around 30, 15 to 20, 20 to 25, and 25 to 30. If you get more than 30, the 6% of people who responded there, congratulations. So for most recently completed job, was the final GP better or worse? Very good to see that 39% of people are hitting it right on the nose. Well done. That's great. I think that's a little bit easier to do these days with, costs starting to stabilise a little bit, particularly on materials. Labour's still a bit tricky. So that's that question. And then, so we did have, though, 25% of people have actually landed 15 to 20 or 25 to 30. So less people than are quoting at 25 to 30 with their current job in play at the moment. So that sort of, I guess, validates to a degree. And 22% saying not sure that job costing is the solution for that job that's in play right now. To properly understand those 22%, if you have proper job costing in play, you won't be questioning what your GP is right now for that job. You'll know very clearly. And it's a good tool to make sure that you get the profit that you've been estimating as well, to protect that profit. So we're going to move on. Thank you for sharing that. I might actually do a little snip of that when we send the email out, so you can see that. Obviously, it's anonymized. There's no names against this. But I thought you guys might find that interesting as well. So we'll share that out. Okay. Back to you, Dan.
Yeah, that's awesome. Thanks, Phil. And again, guys, if you're a bit unsure around what gross profit margin you should be tracking at, I mean, Gayle and I love talking about this sort of stuff. And look, we're not going to send you a bloody invoice for a quick chat. More than happy to sort of give you our strong opinion around this stuff, which is commonly what we're remunerated for. Yeah, definitely reach out and definitely ask the question, or you can reach out directly. So just continuing this job costing journey that we're on, I just want to go a little bit deeper and just apply the assume nothing rule here. And let's just pretend that no one knows sort of what job costing is, but this is the way it works in your business. And just a reminder, you have done a beautiful estimate. You know what you're doing. You've had a couple of peer reviews. If you're lucky enough to have an estimator in your business, you as a owner have reviewed it, and maybe a site manager, and everyone's on board, and good quoting, good bill of quantities, good processes, etc. Now, once invoices and costs start coming in, this is the bit where I get most excited. So probably less so around, cash flows and P&Ls, but I want to know, are you defending that margin? So in that example before, and let's just say we have an invoice coming in from Bathroom 2 from that supplier. So with the bookkeeping processes, the invoice comes in, hopefully it's in full and accurate, and you have purchase orders in place, which Gayle will talk about a little bit later. But an invoice comes in, and what you want to do is that in your job costing system, whether it's Build Xact, which we really love and I guess recommend, and again, it depends on your agent stage, or you could use Builder, Trend, or Procore, or one of those. But when that invoice comes in, you need to identify which job it's against. And then in that beautiful quote that you've created and you have converted it across to a job, you want to identify the item number it is. So obviously Bathroom 2 in, 123 Fake Street. You then want to identify, well, with that invoice that's come in, what was your original estimate? So we originally estimated that was supposed to be $22,000, but the actual invoice is coming at $27,000. And then we go, hang on, so we still have to spend this money, we still have to execute the project and get the job done. But it isn't just going, okay, it's coming at $5,000 extra, or it's 27 grand, let's get it paid quickly and urgently. I want to know why we've given away $5,000 on this transaction. So if you can get into like a weekly, monthly cadence, and monthly at a minimum, if not weekly, fortnightly, this is that whole concept around defending the margin. So every single invoice that comes in via COGS, or every wage cost that comes in via COGS, I want to see it allocated against an invoice. So in this instance here, invoices come in, your bookkeeper or yourself, could be better half, whoever it is, come in and mash the invoice in. This here should be a bit of a red flag and going, hang on, why are we giving this money away? So every invoice that comes into COGS, so whether it's job 2, job 3, different items, whatever it is, this is the process you want to do. And then ideally weekly, you want to bundle all these together. And again, building is bloody complex. You're going to win some and lose some along the way. But as you start to micro measure your business, because if you measure, you can manage it and get that feedback into your existing business. This is where you can start to work out, well, am I winning, losing, gaining? So this is proper job costing. So this here isn't, specifically groundbreaking or anything like that. This is just what bigger businesses do. They micro measure. Here's our target. Here's our scoreboard. This is how we're actually tracking for the month. And if we're winning or losing, if you're winning, high fives and hugs, we get on with it. But if we're losing, we're not going to take a knee. We're going to work out, well, how can we claw that back? What are the other opportunities we can have to try and defend that further? And if you're waiting to the end of the job or 15 months into a build, it's too late. We want to try and get this back to monthly. So this is what job costing looks like on a granular level. It's a non-negotiable, guys, if you're not doing this one. You're on mute, Phil. Got him.
Got me, mate. You got me. That's a 6-pack for you. So next poll. So this is about job costing, essentially. So do you match costs incurred to the specific job, both materials and labor? So we're matching up costs incurred to the specific job and compare to the estimate. This is a confessional. Are you doing it? So never, sometimes, always are the responses there. And then the next one is, if there is a variance to the estimate, what do you do? So we've got multiple choices here, Dan. You want to talk through the options?
Yeah, so be honest on this one, guys. I'll give you an example of big business where Gayle and I have come from. And again, it's not to sound, smug or anything like that, but I know if I'm walking into an end of month with my general manager, some of these bigger places I've worked at, and I'm going, hey, we've missed budget by 20. You can bloody bet I'm going to come to that meeting and go, well, look, we missed it by 20. And then the next hour and a half, I'm going to talk about, well, how we're going to claw that back. So still answer truthfully and all the rest of it. But funnily enough, the job costing process and the bookkeeping process is actually the easy part of this. It's what you do with that information. That's the hard bit. What do? You cooked $5,000, $10,000. That's your money, your profit, obviously money for your household and all the rest of it. Well, what's our strategy to claw that back? So without getting too buzzwordy here, I really want to know, well, what are the options to try and get some money back, from clients or, whatever it happens to be. What's the call to action? That's where the reporting becomes analysis and you get that feedback where you can go, well, what do we do from here?
Yeah, so nothing, I just take it on the chin. Unfortunately, we still see a fair bit of that. I guess there's a materiality piece, sometimes that's just the way it's going to go. But by and large, we'd rather go through these other options. This is multiple choice, by the way. Go back to the client or the supplier and renegotiate or argue, with the supplier because they're just trying it on, and trying to slip one past. Backseller variation, we're going to talk about that. See whether I can game things with the team to use productivity to save elsewhere. That's a big, Dan, you're a big fan of that one, I know. And unfortunately, we do see people who are just hoping that it all turns out okay, not even really knowing. So let's share those results there. It's very good to see that the people in this webinar, 66% are always matching their costs up to the estimate, which is great.
Love it.
If we go down to, okay, well, now I know that, what do I do next? If there's variance, it's a pretty chunky 39% saying that just taking it on the chin. That can happen. I'm sure everyone has to do that at some point. So we sort of expect that to a degree. It actually is good to see that only 7% are not tracking things closely enough. So that's good. I think as a general rule across the industry, people are really wanting to level up their financial visibility and literacy around this sort of stuff. So that's good. And there's some great options there in terms of defending profit. And we'll talk about that proactive stuff a bit more in a minute. Okay. Thanks, Dan. Over to you again. Oh, actually, over to you, Gayle.
This is
Yes.
where I jump in now, guys. You get to listen to me for a little while, have a break from the boys. So thank you, Dan. Thank you, Phil, for getting us this far. So the idea of job costing, it can be quite basic if you do it well and you start it well and you track it. It doesn't have to be difficult. You don't have to overcook it and make it more complicated than anything. And the aim is not to add extra complexity into your already busy days and add another task that you have to try and find time to do. But if you get it right, it means that you can do so many other things in your business and it helps make much better decisions. So on the screen, there's lots of different boxes that talk through all the different downstream benefits of job costing. It all starts with being able to actually track what your variance to the estimate is. And it's really important to be able to do this so that you can then actually start analysing the why and then coming up with an action plan as to what do you do from here. And this is not something that is the job of your bookkeeper to do. In reality, the bookkeepers just want to process all your invoices and get payments made out to suppliers as quickly as they can so that they don't have suppliers chasing them and that you don't have issues and hold-ups on your jobs because they haven't done their processing and payments properly. So this really does land to you as the business owner. To if it's not you doing it directly, it's making sure you've got the right people in your team who know. And it comes from having a really deep understanding of how your estimate was built to start with, and then being able to track what the variances are due to. Sometimes it comes down to, there's an issue with a specific supplier. So they've either not delivered on the pricing that they've quoted you for, or perhaps you've forgotten to get a quote before you've actually sent out your estimate, so that you've just taken a guess and hoped for the best. And then when the invoices come in, it's well beyond what you thought it would be. So it's then whether or not you've got the ability to go to those suppliers and actually request, meet you halfway. Now, look, mate, I was expecting it to be 22K on this. You've come in at 27. Can we agree to split the difference, because we're going to have to work together moving forward, and I just can't keep taking this hit. How come you're higher than I thought? What can we do to work together to get this better for both of us moving forward? Sometimes it's just that you've got the wrong team doing things. You've got productivity issues. Your production manager isn't actually driving the team or isn't scheduling work efficiently. So there's lots of downtime between jobs. You've only got a couple of really big jobs on, and you've got nothing small in between to be able to put you guys onto if there's delays on your bigger jobs. Sometimes it comes down to problems with your estimating to start with, and things that you wouldn't actually identify throughout the course of a job if you're only looking at it at the end of a job. And then you've missed that opportunity to be able to review and learn from those estimation issues and then include those on your new estimates. So if you're waiting till the end of a job before you realise, oh no, we've missed out this whole chunk on this job, you might have gone and quoted several other jobs with that same error. By the time you've identified it, you're already halfway through 3 or 4 other contracts that you have to wear that cost over and over and over again because you haven't learnt and completed the feedback loop early enough throughout the job. Obviously, if you're doing job costing, it helps you calculate your WIP. There's lots of other webinars and information that we've run through at Xact and lots of other resources we have on our website that take you through that. The idea behind being able to calculate your WIP, though, is to normalise your profit and loss so that you can identify, how you're tracking on your jobs throughout each month, at the end of a month at the very least, so that you can be on top of things and identify any issues and address them quickly. If you're doing cost plus contracts, it's really important that you're actually doing your job costing properly, because otherwise you might be missing out on things that, this question from Matt. WIP is work in progress, Matt. So it's as you're tracking on a job, how are you going compared to the costs that you've incurred versus the revenue that or the invoices that you've sent off to your client, so you can track whether or not you're keeping that job under control. Apologies for using an acronym there and not explaining it properly. Thank you for pulling me up on it. So with your cost plus contracts, for example, if you're not doing good job costing, then you might be leaving things on the table that you're not actually including and invoicing onto the client. And that means that you're then having to wear that cost. Comes out of your margin, comes out of the money that you've got at the end of the day, which is not a great position to be in. Again, it helps make stronger business decisions. You can look at, do you need to look at how you're scheduling? Have you got the right people and the right resources on jobs? Do you need to go back to suppliers and negotiate better terms because they're a key supplier and you could actually get a better deal? So it also helps with cash flow visibility. So you can see throughout a job where you're going to land. So you're not going to land at the end of a job and have a massive loss that you weren't aware of and that you haven't been able to take any steps to try and improve along the way. All of this leads to risk management and being able to reduce any risk at the end of a job that you've made losses on. So if you can identify and measure throughout the job that you are falling behind, you can then start looking at, is there something that you can do to save elsewhere? So for example, if your quote has that you're going to build the frames, but you realize that you're running over on your costs, is there an option then instead to get prefabbed frames that'll make it quicker and easier for your guys to put in place, and you can save a little bit on that line item to try and claw some money back. So the whole idea then is to be able to track it so that you might have 4 jobs on the go and 3 of them might be tracking nicely. It's all under control. There's no real issues, but you've got 1 job that you're hemorrhaging money on. Well, if it was my business and I was running this business, not just running individual jobs, I would then look at it and go, right, so I need to put all of my energy and effort for the next little while on this 1 job that I'm really bleeding money on to try and turn it around. The other jobs are ticking away nicely. You don't want to ignore them, but it helps you prioritize your time because you only have a certain amount of time in every day to be able to manage all of the different things that you're having to do as a business owner. I mean, the best option at the end of all this is you're doing your job costing and you're tracking your variances and you're doing a great job. You're hitting it bang on. And that's great. It's nice to have validation that you're estimating and that you're tracking correctly. But that doesn't mean that's the end of that whole decision-making process. If you're tracking well and you're estimating well, that then helps you go, well, how else do I take this business up another notch? How do I get that extra 1% margin? Can I go back to my suppliers and renegotiate terms because they're a big supplier and I want to be able to get a better margin on that source of materials? Is there continuing processes and improvements to get more efficiency out of your team? If they can do jobs quicker, you can fit in more jobs in a year with the same team. Or you could actually go, look, I'm happy with this, but I'd like to have a little bit more time back in my life. And if I can run the same number of jobs, but I can do it quicker and easier, it frees you up a little bit more to do stuff with your family, have a holiday, maybe not work until 11 o'clock every night trying to get everything done. So it comes into that work-life balance piece as well. So it's not just numbers. It can actually have a meaningful impact on not just your business, but also your life. Not to, over-exaggerate how important job costing is, but it can really have some meaningful change in your business. And it's all about learning how to work smarter and not harder, right? So this helps you. You can micromanage it, you can measure it, you can make really clear strategic decisions off the back of it, and you feel more in control so that you're not just hit with a surprise loss at the end of the day where you feel like you're tracking well in a job, but suddenly you've got a cash flow hole. Okay, moving on. Thank you. Right. So that's all the reasons of why. Well, some of the reasons. There's many other reasons that you could be doing. We could bang on about it all day, every day. But they're the key reasons. And it does make it important for your business to be able to track these things. So what does it look like in an ideal best practice situation for your business? Now, this is not necessarily going to be the way that everybody is going to be able to run their business initially, but this is what we like to see if you're operating and working like a big business. And you might be smaller and it might not be possible to build all of these things in, but this is kind of your North Star where we think you should be aiming and where we think that it works the most ideally for the business. So we start with a tech stack. So your tech stack, we've put down what our preferred tech stack is in terms of the software systems that we've seen work the best and integrate the most efficiently for a lot of our clients. However, ultimately, whatever you choose and whatever works for your business, whatever works for age and stage of where you are, your cost point of what you can afford, we like there to be Dext or some kind of invoice capturing software. And that just reduces down your manual data entry for your invoices just to save some time. It should then integrate with your accounting software, which we prefer Xero, but it could be MyOb, it could be QuickBooks. They're the main ones we see, though there are a whole range of different accounting softwares out there that you might choose. We also then like that to integrate with your job management software. So Build Xact as one, it could be Build a Trend, it could be Procore, SimPro, Nextvia. There's so many out there, depending on whether you're resi, commercial, the number of the jobs that you're running, the complexities of the jobs that you're running. But either way, it should ideally be run through a job management software system and not done on Excel or not done on a piece of paper on the edge of your desk when you get a chance. And the final part that we like to complete the tech stack is a timesheet functionality software. So some system of being able to track your time back to a job that then integrates back through into your job management software as well as your accounting software. So in an ideal world, you've got your tech stack operating and integrating so that it's running efficiently and you're not doing any manual data entry, reducing your errors that might come from it, and they're all talking to each other. So you're not having to jump into different systems to put the same piece of information in multiple places. Once you get your tech stack up and running well, it comes down to estimating. And so your estimating starts off with, scope of works. Are you setting your scope of works? Are you making sure that when you're setting those estimates, you're checking back that it's covering every single element? There's nothing worse than sending out an estimate, winning a job, and then getting into the job, starting to run the project, and realizing that you've forgotten to estimate, the side of the house. That's the pathway down the side of the house instead of as well as the garage driveway. And so suddenly you've got this additional part that you need to do, but it's not covered in your estimate. And so you have to then cover that out of your margin. So scope of works is really important. We like to make sure that your estimate is itemized, that it's measurable, and ideally you should be doing requests for quotes. So for your big suppliers, while you're building your estimate, you should be getting quotes from those suppliers that have their terms, their timeframes, and their estimates in there that you can then hold them accountable to as well when they're delivering those services on that job. It just reduces all of the backwards and forwards and the arguments that may come about if halfway through a job you get an invoice with an overrun and it hasn't been accurately agreed beforehand. Your estimates then roll into purchase orders. Purchase orders is the way of communicating your estimate through to your bookkeeping process in reality, is to make it easier for whoever's doing the bookkeeping and the data entry to make sure that they're matching all of the invoices that come through as accurately as possible. So your purchase orders should be raised based on your requests for quotes. We also need to think about the timing. So when are they going to hit? So when are you expecting those expenses to come through? Recently seen some POs being raised by a client of ours that they were diligently raising the POs, but they weren't putting any values on it and they weren't putting dates. So they had no idea of when those costs were going to be coming through. And they actually had no idea of whether or not the value of what was coming through was correct. So there was a real disconnect there, and it made it really hard to kind of cash flow out any upcoming costs. So they should always have your key specifications of what it is that each purchase order is to cover. Ideally, you'll have your site address and your location just to help with that data matching process. And you should really just go forward on the assume nothing rule, particularly if you've got multiple people doing different parts of the process. So if you've got someone internally doing the estimator, you've got a contracts administrator who's running your estimates, and then they're raising the purchase orders and they're sending them out to site. If you've got site managers who then need to be able to review those and when they're getting things delivered on site to check off that what's coming through is correct, you need to have as much information on there as possible. It also then helps with your bookkeeping process. So we touched on it before, but with your bookkeeping process, you really want to take out any of the guesswork and make it as easy as possible for whoever's doing your data entry into your books and approving or processing payments to get the coding right. So you want to make sure that there's a good process in place that if the invoices come in and they're missing POs, what do they do about it? Do they just process them out and then tell you about it later? Or do they flag it with you? If the invoice comes in and the amount is incorrect, again, what are they doing? Are they just paying it and then telling you later? Or is there a system of flagging it with you so that you can then review it and determine, well, is it just that there's a variation that you've forgotten to put through the system? So it's okay to pay that higher amount because you're going to put through the variation to recover it? Or is it that you need to have those conversations and go back to the supplier or go back to the client and see if you can negotiate additional money to help cover the shortfall? The final part of all of that, so that whole journey of the cost from when it first got estimated, got put through your system, through a PO, the invoices come in and paid. Ultimately, the idea is so that you can then run reports at the end of every month to identify what's going on job by job, to be able to really deep dive into what those any variances are. The other really important part of this is we always like to say, you know, your accounting software should really be your single source of truth. And what we mean by that is a lot of builders, you know, you started your business, you're really great at what you do, you really understand your job costing software. You're not so comfortable with the accounting software. You don't really want to jump in and reconcile accounts. You don't really want to run P&L reports. So you're really comfortable in your job costing, and you run your job management systems, and you can track, you know, job by job how you're doing. If you're not then double checking that it's reconciling through to your accounting software properly and that they're matching, you're not able to identify if there's any gaps in what's happening. So your accounting software, when we call single source of truth, because it captures every bank transaction that comes in and out of your bank accounts, your credit cards, and it's a more effective, like, single source of all of your information of your business. So there might be things that you're paying for that you're not realizing that you're missing out on allocating to a job. Or you might have it in your estimate, but it's not running through Xact or whatever the software that you're using because it's on your credit card. And you haven't raised a PO because it's a small amount, like your tip fees, or sometimes your labour, there's no matching back to say, well, I've quoted for this much, I'm paying payroll over in zero, I don't really have a connect in between what I'm actually incurring versus what I've quoted for. And so you don't realise that there might be gaps. And so while your job management system might be telling you that your job's doing really well, you can have a whole bunch of other costs that have just run through, haven't been allocated to a job, and that are sitting and paid through Xero or MyOb that you're unaware of. So you actually don't know where or how you've lost money on a job or made money on a job. So we talk about all of that to make sure that you know, does your accounting software reconcile with your job management software? Can you run a job by job P&L in those? So it's really important that they're integrating properly so that you actually are getting that level of detail. And that way you can start looking at it, looking at what each job, the margin is on each job. And then you can start getting into, how do I defend it? If I'm not making the margin I thought I was, why not? Where not? And then what do I do off the back of that? But without that level of micromanagement and analysis and doing it regularly, you don't get that oversight into your business. And then you can't be proactive on how you're managing any overruns on any jobs. You're really reactive, and sometimes you're not even sure until the job's finished. And at that point, it's too late to do anything, and you honestly just have to wear it all on the chin. That's all for that one. Okay, so we've gone through the benefits of job costing, why you should do it. We've gone through what the best practice looks like in to maximize your efficiencies within your business. So once this webinar's over and you've got all this amazing information that Dan's given to you and that, you know, you've heard me rattle on about, and you've had a couple of polls to kind of get you thinking about what's going on in your business, you know, head back into the office, ideally today, but, you know, maybe this week. I'll give you to the end of the week, you know, because we're all busy people. But how are you actually going to give this job costing a crack? Or how are you going to review your job costing process and actually try and see where you're at? So the key points to all of this is, if you've never done it before and you're looking at just implementing it from scratch, is you really need to overlay a level of commerciality to it. It's not practical in everyone's world to go back and try and reverse engineer where you're at on all of your active jobs. At a very minimum, from today, you could go back into the office and you could start implementing the job costing from new jobs as they happen. That's a no-brainer. That's really easy. Whatever estimates are out there, whatever jobs you've just won, even if they're early stages, you've got a deposit, nothing much has happened. They're really easy, right? You can start tracking them straight away. For your existing jobs, you need to overlay a level of reasonableness. Like, what's the size of the job? What's the timing of it? Is it going to be done in the next couple of weeks anyway? In which case, if you spend, 2 weeks trying to reverse engineer where you're at with it, is it really going to be worthwhile, or will it kind of clear out in the wash over the next few weeks anyway? And what's your gut feel on that job? If you feel like you're tracking okay, there's nothing really flagging for it, is it worth putting all your time and energy into that one? And it's always better to at least start and be, even if it's 50%, 60% correct, and then get better and better over time as your older jobs finish up and your newer jobs all come through and they've been effectively job costed. It's better to start somewhere and know in your mind, well, at least it's 50 to 60% right, or I'm good on those jobs are kind of in the background. It's better to start and have it imperfect than to try and get it completely perfect and never actually get it up and running. So that's in terms of your jobs, new jobs and existing jobs. You also need to have a look at your systems. Are you doing job costing to a degree, say in Build Xact, but it's not actually integrating into Xero properly, or it integrates into Xero, but you haven't turned on the job costing bit, so you couldn't actually get any detailed job by job analysis out of your financial accounting software. Does it not exist at all? Are you sitting there going, oh, I'm still doing all of my estimates on Excel or on a piece of paper with pen? Where do I start? And so just start with the basics. What can you implement easily and quickly now that gets you along this journey? You don't have to flick a switch and suddenly be doing it all straight away. But if you start taking steps towards it, in 6 months, you'll be getting better, you'll have more systems, and you'll be tracking away nicely. You also need to look at your policies and your processes. So do you have any kind of processes embedded with whoever's doing your data entry or your bookkeeping to flag? Like, if an invoice comes in without a PO, what's happening in that space? Do they know what they're meant to be doing with it, or are they just processing it? If it comes in and it's over budget, what are they doing? Are they flagging that with you? Is it really just, well, I'll just get this done and then hope for the best? And you're not really having any visibility over it because you're not looking at what's going on in Xero, and you'd rather just leave that for the bookkeeper or the account to deal with. So it's looking at, what are your internal processes? Who's raising POs? Who's approving them? Are they matching back to estimates? Who's doing your estimates? So there's a whole bunch of internal admin processes to really review here and get all the checks in place so that you can start catching any overruns or any variances as early as possible. And then it comes down to, are the right people doing the right jobs? So do you have somebody who actually knows your business properly or well enough to do your estimating? Or are you still doing all the estimating because you're the only one who really knows how to pull it together? In which case, then who's raising your POs? Do they know how your estimates have been raised, or is someone else doing your POs? So it's really about looking at who's in what role, and are they doing the best they should be? Are they best suited for that role? And also, who's driving it? Is it all on you to do it? Or are there things that you could be delegating out to somebody else, provided you put some processes in place to free you up to do other things that are really important? Are you doing data entry when you really could be spending time doing the estimates and getting those better and more correct? And you could get somebody else to help you with your bookkeeping, as an example. And so, yeah, so that's all from me. I'm going to hand you back over to Dan now. And we're going to run through some job-by-job reporting.
Just really quickly, thanks for that, Gayle. I know we're kind of coming up on time here, so Dan's going to just he's probably got another 5 minutes of content, but I know some people might need to go. So I just wanted to give people the opportunity we mentioned that consultation earlier. So if you did want to book some time with Gayle or Dan or any of the other people in the team, then feel free to just drop a yes in there now. It might be that we just prompted some thoughts about how you can improve job costing today. We've been fairly general today. There's a lot of specific stuff. There were a few questions in the chat there around specific accounting workflows. How do I get Build Xact talking to Xero, talking to Dext? all of that kind of workflow. So if there's something that you wanted to talk about specifically, the other thing that we often get is benchmarking margins. It's hard to actually know sometimes how you sit in the market because we look after so many builders. We've got a good handle on what normal looks like for the different types of builds and things that are in play. So more than happy to sort of work through that with you as well. I'll bring that poll back up at the end of the session as well. But I just thought, I know some people might have to jump off, and I wanted to give you the opportunity to book a consult now. Righto, thanks for that. Dan, back over to you. And we've really just got about 5 minutes or so just to close out the day. Thanks, Gayle.
Thank you.
Yes, noted, Phil. Just really quickly to punctuate some of those points from Gayle. I mean, what she covered has been a bit of a goldmine. If you guys haven't got a tech stack that looks like this or something similar, I cannot stress enough how important that is. If you're still doing spreadsheets or anything like that at all, tech is so cheap. If you and me are arguing over $100 subscription when you're on a $3 million business, like it's an absolute no-brainer. So if you haven't got this at a minimum or some sort of equivalent, highly recommend getting amongst it. Super cheap, AI, all the rest of it. It's amazing. Yeah, so definitely get amongst it. Now, my piece. What I wanted to talk about here is I just want to give a couple of examples of what really good job costing looks like as a live example. I just want to talk about the fundamentals. So I'm not going to talk about how to enter the invoices into Build Xact or anything like that. There's a wealth of knowledge and videos elsewhere as well, but I really just want to talk about, well, how do you get the information in it, and then what do you do with it, and then what does grade look like? And I'll give 2 examples here. And again, just being really mindful of everyone's time, but please book a session if you want to have a yarn with either Gayle or myself or someone else in the team. So in this very first example here, for those of you using Build Xact, this hopefully looks very familiar. So this is a estimate that we have in like a dummy company. So I've used one from an existing client, obviously with their blessing, changed a few bits and pieces, and I've rolled it into this. And what you can see here is I commonly see builders build out these beautiful estimates that go on forever and ever, which is amazing. Like it's an accountant's dream, to be honest, and it should be a business owner's dream. Now, what I want to talk about here is I'm just going to roll up a couple of key items. So for example, with termite protection, earthworks and concrete, bit of electrical and a bit of plastering. So what I care about in my space is, particularly as a CFO, is I can probably tell you the right end of a hammer, and probably not much else. But what I care about is that you've said these costs here for each of these individual items are going to be X. In my world, I want to know whether they come in better than or worse than. So in this instance here, termite protection, for example, this is straight from Build Xact, but the philosophy is exactly the same whether you use Solar Assist, Builder Trend, JobMan, whatever. We estimate we're going to spend $3,200 on it, and then the invoices come in. So you follow the Build Xact 0, Sync, Dex, whatever it is, and it's coming at $2,950. Well, guess what? High fives and hugs. Me as your CFO, I couldn't care when you move on. Well done. And on top of that as well, you found additional margin. So this $250 here doesn't get chewed up by overheads or anything like that at all. It just gets swept up and goes straight to the bottom. So instead of making a 22% margin, that's how you start making these incremental gains that we talk about, or Gayle talked about earlier. So what we want to do here is that every single invoice that does come through your business, we want to micro measure it. So long story short, invoices come in, your bookkeeper's smashing out entries all day long, or your contract admin, whoever it is. So in this instance here, we've gained 250. This item here has come in on budget. This one here has gone backwards by 300. Electrical, for example, so the rough end's gone a bit wobbly. We were due to spend 18, spent 22. These items here is where I'm going to spend all my time. Probably less so this, but $3,600 margin giveaway on what maybe $1 million build or $800,000 reno. They're big numbers. But when you do drag your mouse down the side here, and hopefully you're doing this as a management team frequently, I highly recommend weekly, if not fortnightly. I can see here the sum of the unders and overs. They're actually gaining additional margin. So it's not just the margin you're seeing to hope out and make with the estimate, but you're gaining additional margin along the way, which is bloody excellent, to be honest. So this is Build Xact. If you want to have a chat on this, please absolutely reach out, but this is gold standard. Here's your estimate, here's your actual, and then are we winning or losing? And then this column here is probably the most important column in the entire sheet. I want to know whether you're defending that margin and defending that. A second option, so I've got a client, love him. He's pretty resistant to Build Xact and Builder Trend. Bloody loves Solar Assist, so we've worked out a roundabout way to do it. So we've actually hammered his chart of accounts in 0. we've actually gone, well, Solo, Zero, match them together, and we can still micromeasure the success in the background. So we have a budget that's loaded into Zero. Here, the actuals are coming each month, and we actually run through a process and go, well, for carpentry, roof frame, and trusses, is this item closed out? So his contract admin closes this out for me, because some of these costs that are rolling in here, I don't know where the bottom is. I don't know whether there's more to come, less to come, more cost, less, halfway through, deposit, don't know. In which case, if we aren't at the end, I couldn't care unless there's serious wobble coming through. But these items here, for example, have gone, well, roof frame and trusses, that's overspent by $2,000. So what we do here is I sum up the ones that he's closed out, unders and overs, and I go, well, client X, you're cooking $24,000 of your margin. So we're hoping to make, X whatever it is. But with these items that are closed out, these overs, or particularly project management, so we identify that we missed his time on site because he's on site doing a bit of lot supervision. Well, how come we didn't value your time? So that's the feedback loop. We capture it. Costs are coming in. Well, hang on, your time's valuable. You got a supervisor on site that's a bit green. You're going out there once a week. Why aren't we capturing that? So that's our feedback loop. Now, guess what? There's a project manager fee in that estimate going forwards. So apologies that this is a bit of the lighter version of it, but the philosophy is exactly the same. Whether it's a big business, small business, big tech stack, no tech stack, it's exactly the same. Micro measurement is absolutely critical. How's that feel? Is that all right?
Perfect, Dan. Thank you.
All right.
What I do is quick whip through this, and then we're almost done.
So, guys, just so your time is best utilized on your site, and just so this doesn't turn into a chat fest for me, I mean, I'd highly recommend writing down 1 or 2 really key items that you want to move the needle with today. I mean, your time is valued at $1,000, $2,000 an hour, so it's a big investment of the business's time to have you here. Write down 1 or 2 really, really, really critical things that you want to implement in the business. Write on a post-it, on a wall, whiteboard, whatever it is, and just make sure you take some sort of action out of this. I mean, most of this you might be across of, but hopefully there's been a couple of golden nuggets along the way. But the call to actions here are, just really refining the estimating process. Just because you've done it for a long time doesn't mean you'll be a rock star at it. Like, do you need to trade anyone up? How do you know? Well, you find out whether you're good at estimating by job costing. Because here's the plan, here's the actual one, you line up the 2, and then they'll tell you whether you're any good at it. Team review. I've been going down a lot of rabbit holes of this lately, particularly in the last 9 months, making sure the right people are on the right bus, because you could have the best process in the world, but if you have someone that's a bit of a, I guess, like an internal terrorist or bad for culture, or they don't get it, or, the skills don't match the job description, you want to hammer that out pretty quickly and work out whether they're the right person, in which case you move them on pretty quickly, or are they trainable and coachable, as Gayle touched on before. Contractors, so suppliers, trades, people, whatever it happens to be, make sure it's really tight. So if you're about to enter into an 18-month build and you don't need the tiler, and again, apologies, I'm picking on tilers, but if you don't need the tiler for 12 months, you want to make sure that price that you're getting now for 15 months time when you need them, that price is bloody locked in. So definitely have a think about that process, because I know a lot of you guys will be doing big hours. You'll be sending out RFQs at 7 o'clock at night. You get something early in the morning. Just make sure you're really diligent about that, because there's not a lot of margin and wriggle room. Just be careful you do defend that. And then future stages. So, know your margins. I mean, I had a builder up in Bundaberg recently. I'm like, oh, what are your margins? They've been in client with us for a little while. I'm like, oh, we've always done 13%. I'm like, oh, what do you do? How do you do it? I'm like, oh my God, you guys are leaving 10% on the table. So, and then obviously I get a fair bit of kickback. Oh my God, Dan, we haven't done it for a long time, yada, yada, yada. So part of it is just confidence and backing yourself, because if you negotiate against yourself, 9 times out of 10, you'll lose. And that's what every business owner goes through. So don't feel bad. But ever since then, I mean, we've doubled their margin. So overheads are already paid for. If you remember back to those previous slides, just know your market, know your margin, work out whether you're delivering on costs or delivering on value. And if you're delivering on value, well, guess what happens to margin? It's pretty simple. And I think that's all the big stuff. And I think we're right at the wrap stage.
Yeah, I've done that poll, but maybe just skip just quickly to the next slide there. We're going to be sending out this free ebook that we put together, Profit Growth Essentials. So it unpacks a lot of the concepts that we talk about in these webinars. We've tried to kind of condense it down to one ebook, and there's links to webinars like this that have tools and a video walkthrough of those tools as well. So we hope you get a lot of value out of that. And the next slide is, we've got our next webinar in this series coming up. Dan, if you just want to jump to the next slide, is cash flow. So it's a challenging time of the year, Christmas, January. So we like to kind of run this cash flow webinar around this time of the year. It'll be in November, partnering up with our mates over at Build Xact. something that their audience is really keen on as well. So we'll be sending details of that on email as well, so that you can get that. I will, just before people go, I will once again just do that that poll again. If people do want to, oh look, I don't. Yes, I can relaunch it. There you go. No, I can't. Sorry. If you do want to do a consultation, feel free. When we send that email out, just reply, and we'll set up a time with you so that you can get some time with our amazing CFO talent to help you with whatever it is keeping you awake at night. Righto, thank you very much, everyone, for joining. We hope you got something out of it. Hopefully, just get one thing that you can go and apply in your business today that will earn you a decent whack of extra profit. That would be great. Keep in touch. We'll be sending emails, as I said, of what happened today. And we try and keep you up to date with a monthly newsletter as well of what we hope is interesting topics for you to learn more about as well. Yes, we hope to see you down the track. And thanks again for coming along today. And thanks to Gayle and Dan. Really good. Thanks, guys.
Thanks, everybody. Thanks for listening in.
Okay.
Thanks, guys. Good job.
See you, team. Bye.
Bye.